The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman, usually the host of the Tiger Technicians Hour at noon Eastern Time, sitting in for Larry one more time. Larry will be back, I believe he travels today, should be back tomorrow, doing his show right at this time. We miss him a lot, and hopefully everything works out fine. He had trouble with the internet overseas, and he got it. It was very scratchy, and it's very hard to hear. I'm showing the 2-minute E-mini chart because I love to look at chart patterns. Let me just show you why. Within the Chapman wave methodology, I'm going to find this chart here. We're only looking at either cups, a U-shaped pattern, or an arch inverted U, and that can turn into an H pattern or an upside down pattern. I believe patterns go only 3 ways: directly up, straight down, or they make a cup formation, dropping from one particular point and then going back to that point, or rising from a particular point and going back to that point. How it deals with that left side test of the left side is going to be very important in every case, and I'm always looking for 4 higher peaks, and at 4 higher peaks we can expect something else happens at that 4th highest peak, labeled peak D. I'll talk a little bit more about it during the show, but I just should also mention here, I should have put that, I'm doing a webinar coming up on Wednesday night, right here, Wednesday night, the 3rd of April. I'm doing a webinar. It's for subscribers. You can become a subscriber. It's free. It's basically money back guarantee. Let's put it that way. And within that context, I will be showing the chart formations that I'm anticipating are the ones we're going to be focusing on coming up for the next 3 months or so. But I will be talking about the outlook for 2019 to 2020. I'll be talking about FANG stocks, other major stocks that have had fantastic moves to the upside. What will they become leaders again after any pullback? I'm going to be talking about the 1920s, the relationship of where we are now and have been for quite a while to the decade of the 1920s. This is a decade of the teens, and I'm going to be talking about it in relation to what happened there politically, geopolitically, financially, stock market-wise, etc., and what the relationship means to us today. So it's going to be very intense. We're already starting to try to position ourselves for the next big move, even though I'm anticipating some kind of a pullback. So here we have, in the 2-minute chart, we've got leg C happening in the cup formation. Remember, we're talking formations here. There's the inverted one. I should just draw it in so you can see. There we are. So you're going either from one side to the other. You're oscillating. Sometimes you retest the low, sometimes you don't. Let's see if we retest the high that was made today. The high so far is 2814.75. All right, let's get back to the nitty-gritties here. In the nitty-gritties, the Dow is in a trading range. It hasn't been making lower highs and lower lows. It has been making lower highs, but only one big low. And so far, the low that was made 3 days ago of 25,501 has been holding nicely. I think just for the record, I know Larry likes to do this. I do not have the live DAX index, but I have something that is an exact replica. It is the Dow. There we go. It's called the Dow Germany Stock Fund, or so, I don't know what they call it. But that says that we've made a peak F in the Chapman wave top in the daily chart. I'll give you dates because the prices won't coincide. The patterns will be exact. The high was on the 19th, in my case, 384.68, drops very sharply in a single leg, trough A, troughs on the way down, lowercase a, and on the way up, we use capital letters, 370.60. It got stopped right at the black line, the 14-period exponential moving average of 374. What was the high so far today? 374.02. It's really struggling. The technicals are very weak. The stochastic, the lower one, is trying to rally. And we've got a very nice leg B probably a peak B by the end of the day tomorrow in the DAX, hitting the orange line, the 200-period moving average. Look at that, resistance, resistance. It needs to become support. I suspect at some point it will become support, but in the shorter term, I think it has more to go. On the downside, I'm not sure if that's going to be the case, but there's the peak F in the monthly chart. Very strong pullback from the 440, I think it was 450 something. Yeah, 453.30 area, January of 2018. Well, have a look at this. January of 2018, there was another big American index. It's called the New York Stock Exchange. It made its high at 13,637, January of 2018. And in an even bigger A to B equals C to D, this is the standard, what Larry uses, the lightning rod decline, it plummets from the 13,600s to 10,072 in a 31% correction for the New York Stock Exchange. It's had a spectacular run to the upside, but look at this. This is called the Chapman Wave Inside Track Repellent Zone, and went right into the zone, breaks above it, the green line. That would be very positive. Let's just say if it can get to the 12,900s, it's at 12,590 right now, and it got stuck, and it couldn't even break into the, and hold so far this month. It couldn't even hold above the dashed line, which is at 12,719. Very important phase we're in right now. And let me just do this. I know this is not what Larry would do, but let me just show you. There are some absolutely fabulous stocks. Look at Akamai. Akamai Technologies, a Boston-based company, or Cambridge, I think, makes an all-time high back in the 80s. No, the price was back in the 80s. And that was in 2018, in June, it goes to 83.08. And then it comes tumbling down, not as bad as some of the others, but it really comes tumbling down, and it makes a low at 57.18 the week of the 4th of January. Had a really nice bounce. So there are a lot of these stocks. Look at TMO, which is Thermo Fisher, was Thermodynamics, goes to an all-time high yesterday, 2 days ago, took over. Some company keeps taking over companies instead of crashing after that. It just keeps going higher and higher. Every decade it does this. This is what I'm watching, and the weekly chart is only in a leg B. So this could be a major mover going into the end of 2019. And at this particular point, we'll see how it handles. So you've got a very diverse set of criteria. Look at the semiconductors. Semiconductors right now trading at 104.83, makes an all-time high of 114 back in March. A year ago, 114.55, plummets down to 80.71 for about a 20, was that a 27, 29? I can't remember. Percent decline, 40, so that's 80, that's 40, that's 54. Oh my, way more than that. It gets almost cut in half. And look at this, at 80, it rallies, and it rallies all the way to 110.60 just a week and a half ago. Now it's starting to struggle a little bit, and I suspect it's catching up with the chart pattern I showed yesterday. The shipping is not matching, semiconductor shipping, not even closely matching what's going on in the real world of the semiconductor price. So we're going to be looking at that. The TLT is bonds, 126.13. Went to a leg D. Remember, D is where we start to look at a scans and say, oh, you don't have to short, but you've got to say yellow light flashing. But look at that monthly chart. That is a big move. I'll be back. Basil Chapman sitting for Larry Pesavento. The future is up.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Well, we're back, and after that little Marriage of Figaro overture, we're going to go straight to the TYX, which is the 30-year Treasury bond yield. The brown, that's the white one. The brown one is the 10-year TNX yield. This is the T-bond yield, T-note yield, and the 5-year T-note yield, the FVX right there, the cyan one. Look at this. So it looks terrible. Look, you've gone from 34.55 down to 28.25, 2.85. So this is, it looks terrible. Wait a minute. We've been here. Look, we've been here many times. Look how many times we've been here. Let me squeeze this a little bit. Squeeze. Look at that. We've been here forever. We've just been here, look, all the way back to 2014. That's 5 years that we've been here. We've been lower, we've been higher, we've been like a yo-yo, seesawing, oscillating between this midpoint. I call this a fulcrum line. And there we are. We're right on the line now. So it's not a big deal. I had an email saying the Fed is desperately trying to prevent a crash yesterday, dropping treasury rates to 2-year lows, did nothing. What can they do today? You got to separate, at least this is my point of view. You've got to, timing and separation are really key. In terms of looking at patterns, you've got to ask the question, what occurred when you were here before at this particular point? Are the technicals better or worse? Number one. Number two is in terms of timing, just because you've got here doesn't mean that right this very second you're going to do something. I would volunteer to you to think it a little differently. Say, hey, this is telling us that the Fed is very, very cautious right now. They've gone from a little bit hawkish, they only mentioned it, they didn't do anything, a little bit hawkish to quite a bit very, how can I, sanguine, or maybe worried. But whatever it is, it's important. And yesterday we saw housing stocks actually take quite a nice jump. So that's the way to look at it. What's being impacted? What are the bigger implications? It's this whole thing about inversion. I'm not going to worry about inversion just yet. I'm looking at other things. This economy, when you're getting jobs, when you have some technical problems, but in reality, I hope I can get this particular chart. Control R. Yes, there it is. Look, this is the international picture. The global timber and forestry ETF. I follow this. I show my subscribers to my opening call. Don't forget, you can become a subscriber. Go to the front page of TFNN. You'll be right there, ready for my webinar on Wednesday the 3rd, 5 p.m. Eastern time. This is gonna be a really interesting one because I'm finally using the two words, anything goes, and I'm heading the webinar anything goes because the next 18 months should see a lot of what happened in the latter part of the 1920s. All right, it means it doesn't have to say in 1930s redux. We don't have to go through that. I'm just saying this is a very big parallel for other things. So here you are. Look at this trend line. If I draw it in wood, which is the iShares Timber and Forestry ETF, look, I can make it come in right here. It kind of nicks that area there back in June, July, August of 2018. Then there was a sharp pullback, 83.88 to 55. I would say 27. 27-point decline, 32%-ish, and then a rebound that's starting to fail. That's very important. I want to see wood, the iShares Timber and Forestry ETF, at sometime by July, August, up in the 71 area, not at 62. I want another 9 points. I don't want to be pulling back to the 200-period moving average around about 60. I want to see higher prices. And this is a good sign. Finally, we've got leg D. Oh, look, leg D in the weekly chart of, wow, I didn't expect that. The weekly chart, here we go. Gray, there it is. In the HGX, the Philadelphia Housing Index, very nice. Finally, goes from 369 to 227, another 1/3 drop. And now it's had a really good rally, and it's at 294, I'm sorry, 50 points higher, 25% gain-ish. Very nice. I must get out of this because I don't usually have 5, 1, 2, 3, 4. Well, yeah, let me get out of this. I don't want to mess up my system. Close workspace. There it is. Save and close. So those yields, yes, it is important, but we've been here before and the market's handled it very well. That's what I wanted to say. So thank you for keeping me appraised, certainly of the German bond, but I think that it is an issue, but not as big as an issue. I do believe that we're in for some kind of further consolidation in the markets, and we'll see what happens. So let's go to, we've got, what's the time? 23. We want to get into this section here. I want to show you just, if you were listening to my update at 9, gold down 16 at 1,300. This is below the 1303 level that I was looking at yesterday and saying that's a key support level. Then the next is 1280s. Let's watch, 1291 is the 200-period moving average in the daily chart. Broken key support level. This is going to be very important. It's a peak D. Remember, we're looking at D, the fourth highest peak in the Chapman wave. Got to watch that closely. Let's go before we get to the break. And there it is. There's your leg D in the 2-minute chart. I did it live yesterday. You remember? We were looking at it. And in fact, during Larry's show yesterday, let me see if I can get to that again. That was, in fact, the day's high. Let me just get there. What was yesterday? Yesterday was the 27th, right? So let me see if I can find that. That's not all notated there. There it is. So we made a top yesterday. No, was that? Let me just get this right. 28th. Oh, there it is today. So I didn't do some earlier work on the E-mini. It was yesterday at, let me keep going to the left. Sorry. I'm going to go, there it is. So that was one of the tops, triple top C1, C2, C3. And let's go to, oh man, there it is. So we're going to go to the top that was made yesterday during Larry's show. I said be careful because we're just about to make some kind of a top. And there, 9 o'clock, it made a peak D, just as we're doing right now. It made a little peak C, pulls back, makes the cup formation, and the bigger arch formation didn't quite get to the until much later. It didn't get to the left side high that we were looking at, which is in the 28, 24 area, but it did go to a peak D, and then it made a cup formation as the technicals deteriorated, and then there was this one big spike as the market opened. It went to a peak E, and it went to that high of 2830.50, and then it started to pull back, and look at this. It just went down, down, down. Then you got that double top. We've got a peak G, then it goes to another one, and it goes to that peak C1, C2, C3 right there. Oh, sorry, I hope you don't get giddy. Then it goes to that one right there, and that was in the afternoon, late afternoon, and then it started to decline. They went all the way through until this morning. I didn't notate that. I happened to be sleeping, but I did pick it up very early this morning, and we started a brand new buy mode, went to peak A, peak B, right here, peak C, peak D, pulls back, and it had a little choppy rise to E and an F right there. Now look what's happened. Pull back, started to started brand new movement as we're about to wrap up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're looking at Aberdeen Physical Palladium. This is Basil Chapman sitting in for Larry Pesavento. Larry will be back tomorrow. And what we are looking at is down 5.68 today at 129.46. Remember, in my work, I'm always looking for these peaks. I'm looking for divergences between the technicals and the price. But it ran up in this last move. It made a peak right there on the 26th of February at 149.01. Pulls back right to the 14-period exponential moving average. Then starts to treat the green line, the 9-period moving average, as a kind of a stair-step move, and it goes all the way in a single leg up. It goes from the 140 area to 152.97. On that day, it also had a 150 round number low. I love looking at round numbers because I think it's really important. It gives us clues to what might be going on at lows and highs. Not always, but when it happens, I always follow it. And sometimes it's silent. Like I have a technique called the silent doji. That's that one right there before the high, little tiny doji. It had two things. It had the silent doji and it had the round number. I actually saw this at the time, but I don't trade palladium. I don't do anything with it. I just, every once in a while, someone will ask me about it. I had Jimmy asking me about it late yesterday. I can't remember now if it was for this show or for my show at noon. I'll do it again at noon. So it pulls back. You don't know that it's going to collapse because the stochastic was still very strong. The MACD, the moving average, was failing. It had a deflection lower. And then all of a sudden, yesterday, it gaps down sharply. What a big, one of the biggest moves it's had. Well, the biggest point move that it's ever had, I think. And then, not a percentage, but point. And then today gaps down again. And it's trading at the low right now of 128.66. And look at this, peak D. We're always looking for those Ds. You can go to other letters, but D, look, there's the Chapman Wave instant restart. It goes to D in the weekly chart. And now it's pulled back very sharply. I had drawn this in about 4 weeks ago. Someone had called me and I had this doji candle. I gave a scenario of the doji candle. And as I said, I don't trade it. So when I looked at it yesterday, intraday, I thought, wow, look at that. And then I looked and I said, oh, that's right. There's a rectangle. And I drew the rectangle into the below the gap here instead of doing a little one. Why? Because the MACD was suggesting that it was getting a little toppy, didn't say anything else. And the on-balance volume had reversed at that peak G/C right there. So this is something to be taken quite seriously. Now, as a palladium, isn't palladium used for automobile for the in the exhaust system? I believe so, as anti-pollution. So I'm not sure about that. I know in I'm almost sure I'm originally from South Africa, but South Africa was a big. This was one of the exports, and I think it was for the catalytic converter. I'm not sure. Okay, so watch this. This is very serious stuff. But the stochastic says at 27% is getting close to some kind of area for a rebound. The 120-minute chart is probably saying, oh, flat at 4.9%. That it's in an area where be ready for some kind of a relief bounce. But I would treat it only as a relief bounce at this particular point. It's going to take a while to repair this damage. And it's telling us about selectivity in the commodity area. All right, so I want you to do that. Next thing I want you to quickly show you is we're looking at the volatility index, the VIX. So the VIX right now is down. It's back under 15s. It's at 14.87, but it is in the teens, and it is above. It is above 13. It's in the 14s. In the 13s or 12s, that says it's tremendous buying pressure. So I'm going to watch to see if today's gap up at the open, this gap up that you can see in the futures, going to a leg F with a doji candle right there with a high of 2820.50 is back to where we were yesterday, maybe a little lower, and then we're going to be pulling back, and that we've got to be careful. I had a reading. I have a multitude of techniques. One of them is a technique that I call the Chapman Wave Trin Gauge reading. And the Trin Gauge basically is Richard Arms, the work that Richard Arms did. I just used the numbers, and I used them in my own specific way. There's no correlation whatsoever to what Richard Arms does, but I used them only as numbers. And it had a high reading again yesterday, which suggested that there should be a 9 to 11 point E-mini futures within 2 days. Well, we got it overnight. We got it this morning. Now that's done. So now we're going to have to watch closely. And why am I mentioning this? Because many of those stocks in the NASDAQ, for instance, here's one, Cintas. Cintas is trading right now at 199.76. I've used it for years as an economic barometer. It's overalls, uniform rentals. Let's face it, if ever there was going to be a barometer, maybe packaging and overalls and uniform rentals is it. Look at that high that it made back in September with the S&P, The Dow made its high just the very first days of October, and then it pulled back from 217 to 155. That's a whopper of a move. But look at this beautiful U-shaped pattern. Now, the big question for me, the monthly chart, is this going to make an arch formation, the pattern I call the H? Remember, we saw that on that little chart that I was showing you a while ago. Is it going to make this pattern here, right here, look, the H pattern, and do a retest of the left side low? I don't think so, but I do think it's going to arch over a little bit and try to test 190, which is the 9-period exponential moving average that it walked it. It didn't even run. It just steadily walked it as if it was an elevator, right? Up, 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 and then it started to accelerate above it. When it hovers like that, like a hovercraft, it's going to have to touch land at some point, and that's what it did. So we're looking at this very closely, and I'm saying to myself, that's a spectacular move that we've seen in many of these stocks from the December low. I anticipate if it isn't price, it's going to be time that we see for many of these stalwart winners, and that's going to be important to me. TTD, this is the advertising business, fantastic move. Leg F, just an absolute leader all the way through, stair step, break to the upside, goes over 200 to 214 on the 22nd of March. Now it's pulling back. Peak G/B in the weekly chart. Technicals are good, but starting to deteriorate a little bit. I'm watching this to say, is it telling me that there's time? This is self-service ads. The Trade Desk Inc. trading right now at 181, up 0.62. This is going to be very important for me. What are these major leaders? And I think they're going to be leaders into 2009, to the end of 2019. What do they do? What are they telling us? All right, just wanted to go through that, give you some kind of an aspect of what I'm looking at. The IYT, which is the Transportation Index. Let me just see if I've got any calls coming in. 877-927-6648. Love to hear from you. I'm looking at, okay, question here about the rotation through the different groups. Well, Dow theory would have it, and I'm not a Dow theorist, but I've absolutely kind of followed it for the decades that I've been in the market. I'm looking at this and I'm saying the IYT, the Transportation Index, made its high in September with the S&P at 209.44. It has a little bit of a pullback to 155, a 25% pullback, and then it has a pretty darn good rally to 192. So from 155 to 192, we're talking about just under 40 points. So let's call it 38. That is a fabulous rally. I mean, that's a big 25% rally. I'll be back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Hey folks, don't forget, you've got the Bull Bear Binary Hour coming up with Tom and Tommy O'Brien, and you've got then you've got Think or Swim Options Hour coming up. Well, they discuss a lot of different things. Think or Swim at 11 o'clock Eastern Time. At noon, I come on with my Tiger Technicians Hour, and then you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien back, and I will be interviewed by Tom later on this afternoon. So we've got the E-mini up 4. It made a high at 2820.50. The peak F. I've got a question mark here because it needed to close under the 40-period moving average of the MACD negative for me to put a down arrow. Everything about it says it should have a down arrow, but I'm waiting. And it's got a leg D. Probably it's a peak D in the 2-minute and the 5-minute chart. Remember, 2-minute chart, 5-minute chart, looking at like daily, weekly, monthly, and that 10-minute chart has only gone to a B. But it is, let me show you quickly, it is, I should have put that in. It's an alternate. It's an F/B because it's still in the waveform of what we were looking at before. Let me just get out of that. Okay, so we've got just a moment to go. I don't want to run out of time. I'm going to put this in F/B. It will be a very positive if it goes to 2821. And that should mean that for the next at least hour or so, there should be higher prices. If it starts to fail and you see it, instead of at 28.15 right now, it goes underneath 28, I would say 28.10. That would be a negative and probably negative for the day. But we'll see what happens. Okay, now let's just go through this quickly. Remember yesterday we were looking at the VIX index. We're using that. I'll do that again. The VIX index right now, the volatility index, is trading at 14.94. If the Dow, which is at 60, up 68 now, I think we'll see what happens. It was helped a little bit by Boeing. Boeing's going to go up and down today. I think the talks and all sorts of things going on. However, if the Dow is up 60 to 80 points between 110 this afternoon and 220, S&P's up more than I would like 8 points. That's going to be good for a positive close. And the VIX index, if the VIX index is below 14.60, that'll be a positive. If, on the other hand, the VIX has gone into the 15.20s and the Dow has given back most of its gains, is only up about 20 or even negative, or the S&P is only up +3 or negative, that will say, you know what, could be frustrating again tomorrow. This is a very choppy period we're coming into. As far as I'm concerned, we are very selective in my daily newsletter, the Tiger Technician, daily newsletter, the opening call, very comprehensive newsletter every day. We've got positions that we're taking. It's the first time we're starting to tilt towards the short side for quite a while. We'll see how that works out. But I think you've got to be very selective here. And yet the moves are very quick. You saw how gold pulled back really sharply from that peak D top. You see how the dollar's actually holding quite well. Is it still holding well? Must have given back some. No, it's great. 97.22 subscribers. We've been long for a year. It'll be a year next week on the 4th, from the 4th of April last year. I'm very impressed. I thought it'd be taking a little longer to go sideways, to consolidate, but it is very good action. 97.23 in the dollar index. We'll see what happens. So have a wonderful day. I don't want to sign off before 9:45. Oh, I've got plenty of time. I thought we were in the final few minutes. Nice. This means that I've got time to show you the euro, EUR, USD, the euro. Terrible. I spoke about it yesterday. I said, lousy chart. Just, now it's got the arch formation has gone to an inverted V formation at 1.12. That weekly chart is terrible. That monthly chart is horrible. Stochastic is making in the monthly the W formation, and that's saying that in today, so this is the 28th of March. By the 28th of April to the middle of June, this W formation should be starting to go from 13% to 15 or 17%, so that the euro can finally get into the 1.15. I'd actually put it into the 1.15.5 area. As gold starts maybe its next rally phase, the dollar takes another breather, because this pattern is saying with a flat stochastic at 28% in the weekly chart, MACD about to cross negative, the euro is just, it's not looking good at all. USD JPY, this is the yen US dollar currency pair, had an intraday pullback to 110. Now it's at 110.79. Nice bounce. Just it's doing the same as the dollar, just direction-wise, not price or pattern-wise. Pattern-wise, it held. I spoke about it yesterday, holding the 200-period moving average. Remember, moving averages for me are just, they're like they're road signs. You're driving along. Do I take a left? Do I take a right? Do I slow down? What's the speed limit? Can I go over a certain level? Is there a little bump in the road? What am I looking at? And that's all it is. I like to have as many little icons as I can see. 111 is the 200-period moving average resistance of the daily. The MACD is looking lousy, but it's trying to turn up. Stochastic has turned up from the under 20% to now 30%. It's a good sign. This is nothing. The euro has to the yen has to be trading for about 2 out of 4 days above 111.50. I'll be impressed if it can do that. It'll say to me, aha, we can now go to a leg D above the high of the 8th of March, 112.13, and that'll be very positive. Meantime, it's just stuck in a range. Had a spectacular move off the Chapman Wave Roman candle, this particular candle right here. Normally, we've seen this happen over and over again, where we got the candle. If it trades halfway into the wick for a shorter period than the time frame you're looking at, there's a real good chance it's going to go to and probably break the low. Didn't do that. It's like an aberrational move. You remember this aberrational move? There was that one day, it had to do with the pound or something, that was 105.18 low on the 3rd of, I remember that. The 3rd of January, there were a lot of things going on because we had just made that low from the post-Christmas December 26th low. 108, 105, 104. So let me put that in on the daily chart. That's 1 on the 4th of January. That was a spectacular plunge and rally. And it hasn't looked back since. That's good. That's a very good sign. And there you are. But look at this. The MACD's turned down sharply. The stochastic has gone away from the 90% area down into the 20. Now it's above that. And yet the price, considering, is holding quite nicely. So we'll be watching that. I want you to show you high-grade copper. High-grade copper. Look at this. Where did I go? Did I just type in the wrong place? Hope not. High-grade copper. It looks terrible. Oh, I want you to put this together with wood. Remember the iShares Timber and Forestry ETF? Global. So copper is global. iShares are global. The Timber and Forestry, wood, WOD is a symbol. And that had a rally. And then it kind of gave back some. And now it's kind of stalling. And high-grade copper had a bounce off the low that was made back also January, the first week of January, from the 2.55 area, soars up into 2.96. Now it's at 2.87. It's holding okay, but I want to see it much higher. Now we've got that break. Basil Chapman sitting in for Larry Pesavento. Let's have a look at that E-mini as we're about to go to the break. Yep, it made that peak F. I can put a down arrow here, at least for now, and we'll talk about it when we get back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I just got an email. I was curious, so I looked it up. Both are in catalyst converters, that's palladium and platinum, about $35 of each. I'm listening from a ship in Suez Canal. Next stop, Cyprus tomorrow. You're loud and clear. Thanks, Al. Whoa, Al, thank you, and enjoy your trip. Imagine that. I know. I always listen whenever I am, wherever in the world. It's fun to go to TFNN. Yep, I will do that, Al. My Al here, engineer, and thank you, Al, in the Suez Canal. So, yeah, high-grade copper. Now, I've already been through what we're looking at. My suspicion is, and let me show you this very clearly here. Here's my E-mini. I call this a peak F, and then I always, those of you who know my work, I get this sharp move down. I immediately draw a rectangle, and I say there could be a rally in a shorter time frame. It's a 2-minute chart. I could do a 30-second. I won't. That goes to a peak D, and it goes toward just on or just above the left side high, and then be careful because it comes right back. Well, that's kind of what we've seen here. We've got a gray ABC underneath the high of 28.20. Watch it closely. So that's the daily. A break into the 28.22 says, nope, we're not going to be pulling back yet. But it is a peak D in the 5-minute chart. I also haven't been able to, there I couldn't put in a down arrow because the MACD is still really strong. Stochastic's weakening a little bit. So let's just watch this closely, and I'll say it again. A close in the next half hour or so under 28.10 in the futures says be careful because you might have used up all the energy at the very beginning. All right, let's just get back to this for a moment. We're looking at a situation. We are the QQQs. We want to see that. The Qs are right now up 44 cents. Nice little bounce off the 14-period moving average, but still way below the 182.83 high of the 21st just a week and a half ago. Watch it closely. A close in the Qs in the next 3 sessions below 176 suggests that the NASDAQ 100 and the semiconductors are probably the areas that are going to take a breather into the first week of April. Have a wonderful day. Larry will be back tomorrow. Stay tuned. I'm going to be doing the update in a moment again. But otherwise, I'll be back at noon for my show, The Tiger Technician's Hour. And check out my webinar.